Milkman?
No.
Pizza delivery?
No.
Welcome to Hawaii. Today, we are talking about the hottest stock offering of the year, Robinhood. They just went public yesterday, and there was a lot of debate on what the ticker symbol should be called. Should it be Hood or should it be Rob? Today I want to talk about investing in Robinhood for the long term, because like them or not, Robinhood can be considered one of the most important companies in the world of investing, and they sort of changed the game for everyone. Now, when I started investing way back in May of 2014, it was very expensive to get started. And just to give you an idea of how expensive it was, brokerages were charging no less than $5 per trade, which doesn't sound like a lot, like $5? I got that. But $5 represented 5% of somebody who could only afford $100 to begin investing with. That 5% is a lot when you consider the fact that the stock market returns 7% per year on average. And that was just for one side of trading. That was for buying the stock. But what if you wanted to sell it? Well, there goes another $5. So that's a $10 loss off of your initial $100, which meant a 10% loss, and that's not even factoring in what your stock did, because that's just assuming the stock did nothing and stayed flat. If you lost money on the stock, you lost even more money. So the perception of the world of investing was that it was only for the rich, until Robinhood was the first to sort of change everything. That's technically not true. Actually, Trade King was the first, and then they were later rebranded to Ally Invest, and then they bought out Zeco, which was what I was using, but Robinhood was sort of the first to go public and become popular. So let's talk about investing in Robinhood. Hi, my name is Andrei Jikh. Hope you're doing well. Come for the finance and stay for the hood. Behind me is Maui. It's actually pretty cool. I'm here for a few days. It's my first time taking a vacation in like a few years now, but I'll show you the studio later in the video for anyone who wants to stick around. So first, a disclosure about my relationship to Robinhood. I have most of my stock portfolio with the app. I've been using them since 2014. These are my individual dividend stocks, but I also have a ton of broad market index funds like VTI, VOO, SPHD, and a ton of others, but I was not paid to make this video. In fact, I've never been paid to make any video for Robinhood because I've never been sponsored by them, and the big reason for that is because I've tried to stay as objective as possible when reviewing financial products, and I don't want somebody to pay me and tell me what to say. Now, I'm not 100% objective. I don't think any creator can be, because we are all to some degree financially incentivized to talk about certain things because it drives signups and affiliate links. So it's never 100% possible to be objective, but as long as we're transparent, hopefully that's a good place to start.
He's a shill.
But I will say that I reserve the right to be a sellout. I've just never been offered a price where I'm ready to sell my soul, but I'm still waiting for the offer. So here's a play-by-play of what happened on Thursday morning. I wake up, I'm super excited, the market opens, it's at $38 a share. And that is when all the insiders, like the employees, all the executives, start selling off their stock, and the price drops to about $33.70-ish, which is where all the retail investors started to get excited. They started buying up the stock, which is why it jumped up all the way to about $37.75, not quite where it opened. And that's where it pretty much peaked, because for the rest of the day, it just sort of trailed off and finished at $34.85, which goes to show you one more time that investing in a company on IPO day is almost never a good decision, but that's opening day, which is sort of understandable because there's a lot of excitement, there's a lot of hype, there's a lot of price action, but what about investing in the long term? Because that's what I'm more concerned about. So let me share with you the future growth prospects that I can see and some of the other downsides and risks that you might not have thought about. Now, I know it's very popular to speak negatively about Robinhood, but they've also carved out a very special niche for themselves by catering to the little guy, the retail investor with not a ton of money. And because they did that, they now have over 18 million funded accounts with over $100 billion of assets under management, which also makes them the third biggest brokerage in the world, which is pretty impressive, because in 2020, they grew their revenue from $277 million to $958 million, which is something like a 245% annual growth rate. And in the same period, in the first quarter of this year, they're up to something like $522 million, which is a 309% growth rate. These are massive numbers for a company that, at the time, hadn't even gone public yet. And a Gallup poll showed that 68% of the people between the ages of 18 to 29 haven't even started investing in the market just yet, which goes to show you that there's a lot of room for growth and for a lot of new customers. The only downside that I'll say to all of the things I just said is that, remember, this was 2020. When there was a pandemic and everyone was at home, and Robinhood was like this comfort app where people can just yeet their money and just start gambling, which is why Robinhood got a lot of new customers and a lot of new signups. But I don't think that same growth rate is sustainable under normal circumstances. Wow, this is getting a little bright, huh? I should probably have thought better about backlighting this whole scene. I'm a bad YouTuber. We'll do it live. Another interesting thing about Robinhood, and I don't know if this will change your mind about them or not, is how they did their IPO. Because when companies go public, most of them will sell just 10% of the IPO to the retail investor. And the rest they'll sell off to banks, which come together to form what are called syndicates. And those syndicates sell to even bigger players like hedge funds, pension funds, and after all the big players made their money, that's when the retail investor gets something like 10% of the IPO. Now, according to Robinhood, when they did their IPO, they issued something like 20 to 35% of their shares to the public. And the reason they did that, and I could be totally wrong, is because they didn't want the public to point the finger at them and say, see, this is why your stock price dropped at opening day, because you sold off to all your hedge fund friends. I could be wrong, but that's my guess as to why. They just said, hey guys, we didn't manipulate anything, it's totally in your hands. Another reason you might want to consider investing in Robinhood is because the expectations for Robinhood are so low. Everyone has such a negative connotation and perception of Robinhood that, the share price is in the gutter, as opposed to Coinbase, which was expected to be perfect. Everyone expected Coinbase to be basically Simone Biles, and when it didn't perform, Coinbase was like, peace, I'm out of the finals. I'm not gonna participate anymore. You guys can handle it without me. I'm so bummed I didn't get to watch her at the Olympics. She was the GOAT. So those are some of the reasons why you might wanna invest in Robinhood. Now let me tell you some of the reasons why you might not. Where is this square coming from on my chest? I feel like Tony Stark. I feel like Iron Man. I have no idea where the reflection's coming from. I can't find it. The first reason you may not wanna invest in Robinhood is because their growth potential is somewhat limited. Did you know that the average account value of a Robinhood user is something like $5,000? That's not a little bit of money, but that's very little in comparison to their biggest competitors like Charles Schwab, who has an average of $100,000 per account. That's a lot more money. Now let's look at the median, which is maybe more accurate. The median is only $240 for a Robinhood account holder. And this tells us a few things. It tells us that the average Robinhood user probably doesn't have a ton of money to start investing with, they're just getting started, and they're not very sophisticated. And it also means that maybe it's just their second trading account. It's just what they trade for fun with their play money. And this is a big problem for Robinhood. And the reason for that is because as a company, you want to diversify your income streams. You want to have a lot of different ways of how you make money. For example, Charles Schwab makes over 50% of its money from the interest off of their user accounts. For example, in 2020, they earned over $6.1 billion. They have so many customers with so much money that that's enough to pay their bills. That's insane. Another way that Charles Schwab makes money is from the account management fees from their actively managed funds, which is most of the products that they offer. And so for their more sophisticated clients, they can have you buy an ETF that's actively managed, and they'll charge you a small interest rate and a percent for managing your portfolio, and that covers more than 30% of their income. That's, again, a ton. The point is, that company has a lot of different ways of how it makes money. Robinhood can't really do that for their sophisticated clients because it doesn't really have any. Robinhood has only one income stream, and it's not a very good one. Oh my gosh, I finally figured it out. It's my viewfinder. Nice. Now I'm Vegeta. Power level over 9,000. Robinhood makes roughly 80% of its revenue from something called payment for order flow. It's a very controversial way of making money, and I'm not going to get into the complexities of how it works, but just understand that they route our trades to market makers, which are companies like Melvin Capital and Citadel, which aren't necessarily always the good guys because they want to make money. And it also means that even though we buy our stocks on Robinhood with no commission and no fees, it also means that we don't always buy the stocks at the best prices. And even though we might overpay a fraction of a penny, which means actually very little difference in the context of long-term investing, it still gives us a bad perception, which is also why countries like the UK and Canada have both banned payment for order flow. And the research found that it improved the execution price in 90% of cases, up from 65% before they banned it. That's a massive improvement. And this means that at any moment, our Congress could be like, Canadians are getting better stock prices? What's all this about? Our Congress could regulate it, which means potentially banning up to 80% of how Robinhood makes its money. That means Robinhood needs to get creative and come up with more income streams. But that's the problem. Their greatest strength is also their greatest weakness. The best part about Robinhood is how simple the user interface is. That's why I use it, that's why most people use it. I just wanted to buy and sell stocks. I don't care about margin trading or options trading or perfect execution prices and times. I just want to keep it simple. But if they change that because they want to compete with Charles Schwab with more advanced features and more sophisticated products, that could mean potentially changing the interface and fixing what isn't broken. And that's a huge risk. There's no guarantee that what got them here will get them there. I don't know if that makes any sense, but whoa, I'm from heaven? Hi. So having said all that, here are my personal thoughts, taking everything into consideration, both the good and the bad. I'm tempted to buy the stock. I think Robinhood is very beat up right now. Nobody likes them. There's low expectations. People think there's a ton of risk with Robinhood, and maybe there is. But I think it's a perfect example of what to do, to be a contrarian, to buy the opposite of what the public thinks is good. Coinbase is a great example of what not to do because everyone loved Coinbase. Everyone thought Coinbase was going to be this perfect stock, and when it wasn't, it didn't have any room for error and the stock dropped. But in Robinhood's case, I think the biggest risk is the regulatory risk. As I'm talking, let me just adjust exposure because the regulatory risk I think is going to go away because I don't think Congress is just going to ban payment for order flow. It's just too big. They realize that it's going to be the literal end of Robinhood. So instead, as weird as it is to say, I think what's really going to help Robinhood succeed is FedCoin, the government's stablecoin. And this is because we're gonna have a real-time settlement system, which means market makers like Citadel, like Melvin Capital, will have less risk, which means faster execution times and better stock prices, and Robinhood doesn't have to shut down trading of stocks like GameStop. So I think long-term, that's what's gonna help them out. So I do think that they have a bright potential, but there's definitely some risk. So I did not buy this stock on IPO day, and it's a good thing I didn't. That was the right move, but it's definitely a stock that I'm gonna be watching closely and maybe consider buying in the future. As always, don't forget to smash that like button, subscribe if you haven't already, go get up to $250 worth of free Bitcoin with this BlockFi link right here, blockfi.com/Andrei. Go get your 2 free stocks with Webull. When you deposit $100, you can get 2 free stocks valued up to $2,300. Then you can go track them automatically with a spreadsheet link down below in my Patreon. Love you. Thank you so much for watching this video. I will see you back here on Monday, Friday, sometimes Wednesday, and I'd love to know if you actually bought Robinhood or maybe you're considering buying it in the future. In the meantime, I'm gonna go enjoy Maui. I have a couple days left here. I'm super excited. I'll see you soon. Take care. Milkman?
No.
Pizza delivery?
No.
Welcome to Hawaii. Come on in. Oh no, this is our little cottage that we rented. It's so beautiful, it's so perfect. It's not too big, it's not too small. It's just right. Little kitchenette over here. Really well done. I think they just remodeled it. Look at how high the ceilings are. Super cool. And this is my favorite part about the whole thing is as you step outside the living room, this is the backyard. Wow. What? Audio test, am I still in range? Sweet. Can you imagine just watching sunsets here, sipping Muay Thais? Is that what they're called? No? Okay, I don't drink, I don't know what they're called. Dining room, really nice little area. And then if you come on in right here, you'll see this little tiny room, which is perfect for not spending time in because you're never gonna be here because you're gonna be enjoying the outdoors. But if you wanna relax, you've got the space to do it. It's pretty cool. Same idea, everything's really open. And if you come through this way, show you the primary bedroom. Wow. Same idea, you get the outdoors. And I think we're gonna sleep with this door wide open because here in Hawaii, there's no AC. I mean, most places don't have AC just because they keep the doors and the windows open and the breeze rolls right through, which is pretty cool. Yeah, we'll just have all the insects sleep with us, it'll be fine. I actually saw a little lizard in here, like a little baby one. And if you come on in, this is the primary bathroom. This is a little shower, so you can shower here. And then when you're done, you can open this up. Open this up, and then you can take another shower. So you can shower while you shower, so that way you can shower. You'll be ready to go outdoors. Again, we got that same open concept, and that's your backyard. How cool is that? Most beautiful thing ever. Why are you following me?